Hello everyone, and thank you for joining us for this latest BKL webinar. I hope you've all had a good summer. I've been extremely busy counting trophies. Those are big silver shiny things for the benefit of Spurs fans, but back to reality. Sadly, I'm on my own today, but for better or for worse, that means you get to see me, so see how you like that. And we're here today to discuss a very difficult area, or an increasingly difficult area in tax, R&D tax credits. So not so much a webinar, more of a group therapy session. So be very grateful for your war stories as well as your questions. Do feel free to type away. We'll do our best to answer them as we go along, or if we don't have time, then we will try and cover that off as we send out the slides and a copy of this webinar to you afterwards. Sitting in the background is my faithful assistant, David Goldstein, who always works very hard in producing these webinars. So thank you, David. David will be there if you've got any technical difficulties, if you can't hear, you can't see, whatever the problem may be, or any of the general questions, David will, I'm sure, be able to help in the background as well. So thank you for David for that. So lots of changes on R&D. It's, as I say, becoming a very difficult area. What are we going to cover in today's webinar? Well, we'll have a bit of background just to settle ourselves in. These reliefs have been around for a long time. We'll talk about the definition of R&D and then start drilling down into the two regimes currently that we have at the moment. I think there used to be three going back a little time as well. We'll then dig a bit deeper into what we mean by qualifying expenditure under the two regimes, and then we'll take a look at the further changes that are coming into effect from 1 April 2024. Very topical at the moment, though, is this new digital submission and how to claim R&D. So a few initial thoughts on that. And sadly, how we deal with HMRC inquiries that are becoming more and more prevalent, more and more difficult to deal with. But as I say, anything else you want to venture into, please do type away and we'll see what we can cover off during the next hour. We should be finished by 2 o'clock. So there we go. That's what we're going to cover today. Let's have a start. Quick introduction to these R&D tax reliefs. I think if my memory is correct, the SME regime in particular has been around since 2000. Originally was just a regime for small and medium-sized enterprises. Then we had the original large company regime. Now the current amended large company regime. And there was a transitional phase where we had both in effect going back over a decade. It's not particularly original in the sense that there are many similar regimes all around the world, so the UK is trying to keep up. And the idea was quite simple. We wanted to reward innovation and to encourage businesses to undertake R&D. But I think it'd be fair to say it was arguably poorly targeted and policed by HMRC and open to abuse. And we'll see how a few issues have come to light and what the revenue are doing about that as we go through this webinar. One of the key problems, though, is the definition of R&D. I think we all have our own idea, but we have a specific definition for tax purposes. But it is ultimately subjective and remains so to this day, notwithstanding, as I say, we've all had 20 years to try and get our heads around it. So there has been significant tinkering by HMRC of late to try and address this point about being poorly targeted and policed and open to abuse. And they are now taking a much tougher line on claims. I had a colleague who worked at the Revenue and he used to tell me, yeah, the Revenue, they were facilitators. They weren't just there to take, they were there to give. And this was a prime example of that. But as we'll see, unfortunately, that attitude is very much changing. And then we need to look at the new combined regime from April 2024. It's always struck me as a little odd that we have separate regimes for SMEs and large companies. So in many respects, it is welcome that they're combining them. But well, we'll dig into that and you can draw your own conclusions. So that's a little bit of the background. Let's just have a look at what we mean by R&D. Now, this used to be the DTI guidelines. It's actually now the Department of Science, Innovation and Technology guidance of 2023. You can find it in the revenues manuals. I've put the reference there, CIRD 81910. And before you all start panicking that this is a major rewrite, it's not. It's the old DTI guidelines that have been around since 2006, I think it is. The only significant point is we now can claim for pure mathematics under the R&D regime. So these new guidelines really just incorporate that. Everything else is unchanged as far as I can see. So what is R&D? R&D takes place when a project seeks to achieve an advance in science and technology through the resolution of scientific or technological uncertainty. And I've highlighted some of the key phrases there, and you'll see the relevance of those with this new digital submission later. It has to be, though, an advance in the industry or field as a whole. It simply can't be a case that this is difficult because the company is catching up with industry standards. And again, even this can create difficulties if there's only one other company on the other side of the planet that has a particular piece of knowledge. You can still claim R&D. That is not widely known expertise. Where the dividing line, if there's 20, 30, 40 companies that know this, well, again, it is and remains somewhat subjective. But really, that's the key to it. Have you achieved, looking at a project as a whole, I think is an important point to make. Every project will have routine elements. If, for example, you're building the world's most advanced computer robot to do tax returns, someone's still got to solder the joints and put the envelopes in the post. So look at the project as a whole. Were there fundamental technological barriers? The fact that there may be routine elements in there does not preclude you from the relief. We could drill down further. Is it one project? Is it a number of sub-projects? But again, it only highlights the uncertainty in this field. So what sort of things can qualify, or let's just explain that in a bit more detail. So scientific areas of investigation that may create, and again, this is very much lifting from what's in the DTI, or I should say the DSIT definition. Projects which seek to create a new process, device, material, product or service through technological advancement, appreciably improve something which already exists. Piecemeal improvements, no, it has to be appreciable. Again, where's the dividing line? We could be here all day talking about that. And it may even duplicate an existing product or process, but in a fundamentally different way. So it's very much a case of looking under the bonnet here. I give the example. We'll come on to software in a bit more detail later. You may have two floppy disks in old language that you plug into your computer, and to the user they do exactly the same thing, but the second disk is duplicating that existing process but using brand new technology to deliver it. Maybe it does it in a brand new language that's never been used for these purposes. Maybe it's using a tenth of the memory that's never been used before. So it's not so much what the product does, it's the technology that underpins it. And I think where a lot of people go wrong is they will explain what the product does. Yes, of course, that's helpful background, but it's about the technology that's being used to deliver it. And the most overused word in the context of R&D is that one I've highlighted there. It's unique. Well, yes, it may be unique, but being merely commercially innovative is not enough. You may have spotted a gap in the market that no one else has exploited, and good luck to you, but that doesn't make it R&D. If the reason no one else had done it was because there were fundamental technological barriers to doing that, we're in the game. If it's simply you've spotted an opportunity and used existing software techniques, or it could be any other industry, to deliver that, that's not necessarily R&D. And the point in the revenue we're honing in on now, just because it's large and complex doesn't make it R&D. It must really push the technological boundaries. If a competent professional would known how to have approached the problem, that is not R&D for those purposes. If a competent professional would not have known how to solve the problem, then we may well have R&D. So what sort of industries might qualify? Well, as I've said there, you don't have to be sat in a lab coat, as it were. Yes, it's R&D, but any company developing new products, processes, or involving new technology and delivery of those things. So we've had claims for in telecoms, defence, even financial services. It's not immediately obvious that involves new technology, but it certainly can. Manufacturing, of course, and software development. But as we said, HMRC are now policing this far more closely. It used to be a case, phone up HMRC, there'd be a lovely person. Hello, we'd like to claim R&D tax credits. How much would you like, sir? And the check would be in the post. It was almost help yourself services. But these days, I'm afraid HMRC is no longer Santa Claus. They are more Ebenezer Scrooge. There's 300 inspectors have been hired simply to review R&D cases. They're sending out nudge letters, particularly in the software space. And you might want to think about your SIC code at Companies House. If that is in the software space, then you can expect far greater scrutiny of your R&D claims. And certainly from our own experience here at BKL Towers, the majority of claims we've seen are software related. And I've had conversations with HMRC and they said, look, we hate software claims. You know, how can you genuinely prove that a piece of software is truly cutting edge? And unfortunately, the days of HMRC giving you the benefit of the doubt have sadly gone. So some examples of the sort of claims we've seen is robotic double glazing ceiling units. That one was great. Have a robot that could sense the shape of the glass. It could be any shape and would put that sealant you see between the two panes. If it's too runny, you're going to make a bit of a mess. If it's too thick, it won't seal complex shapes, etc., etc. You get a feel for the sort of difficulties there. Fingerprint recognition technology. Well, as I say, that's perhaps nothing particularly new these days. We all have it on our iPhones. But 20 years ago, that was truly cutting edge. Biodiesel production, 3D television systems, lithium-ion batteries have a nasty habit of exploding, those things. So you certainly need to be careful, and there's plenty of R&D there. And as I say, the bane of my life these days when it comes to R&D is software. So let's now start drilling down into how the regimes work. Rather silly question. Is there just one R&D regime? No, of course there isn't. There are in fact two, one for SMEs and one for large companies. And the limits, as we'll see in a minute, are really quite generous as far as what is an SME. And you can be thrown into the large company regime, as we'll see, but the vast majority of companies that we see are qualifying SMEs. Used to be far more beneficial, the SME regime, so we'd always try and make sure we could shoehorn ourselves in there. But as we'll see, that gap is very much narrowing, and given the intention to merge the regimes next year, well, so be it. It'll save a few sleepless nights when you worry about have you got the calculations of whether you're an SME correct. So how do we define it? Well, we may have left the EU, but we've not left the EU completely when it comes to tax, as it were. This is still based on the annex of 2003/361 of the EC definition of small micro enterprises, etc., etc. If you put that into Google, you will find it along with your normal tax references. Broadly, we're looking at if it's a standalone company. Let's have a look at that. If it's part of a worldwide group, then we say, do you have less than 500 employees? And you must satisfy one of the following: turnover less than 100 million euros, or a balance sheet total, that is your gross assets, excluding liabilities, of less than 86 million euros. As I say, on a group worldwide basis. So pretty generous, I think we'd have to admit. Yes, strictly we should look at this on a year-by-year basis. If you organically grow, then you still take the benefit of the R&D regime for the following year. If you are taken over that year of change, you can get thrown into the large company regime. So, as always, lots of potential complications and nuances. If you have investors with more than a 25% interest, a so-called partnership enterprise as defined for these purposes, then you may need to do a bit of aggregating. You take a proportionate share of those partnership enterprises. If that investor is what we call an institutional investor, a PE house or similar, then the rules are a little bit more flexible. It's only if they have a controlling interest that you have to start aggregating their interests, as it were. There's also, just mention a little nuance. What if you are a corporate member of an LLP? They can still claim under both regimes. The revenues view, I've put the revenues manual reference there, is that under the SME regime, you can't claim the credit, though. You can claim the uplift on your share of the LLP's expenditure, but not the credit. I'm still struggling to understand exactly why that is. It's not something I've had to actually worry about in practice, but if anyone's seen the point or can enlighten us, feel free to type away. But that's what we mean by an SME. And as I say, that's where to date, I think the bulk of claims have been made. So there we go. So you're an SME, you're doing R&D as defined. What reliefs are there? Well, what you get is an 86% uplift on your qualifying expenditure. We'll define exactly what we mean by that a little bit later. For expenditure incurred prior to 1 April 2023, the rate was 130%, and it's changed over the years. It kept increasing and becoming more and more generous. And then, as we'll see, because of this perceived abuse of the R&D regime, and I suspect because as a country we're pretty much skint at the moment, I suspect it's come down a bit. So for expenditure incurred after 1 April 2023, 86% uplift. And if you're a profitable company, that's broadly where we stop as far as the tax relief goes. So there you go. I just add there's been lots of changes from 1 April 2023, some are for accounting periods starting after that date, some for expenditure incurred. Hopefully I've got it right, but again, if you think I've misstepped at all, do let us know. So if you're profitable, that's your relief. If you're loss making, things are a little bit more complicated. And look, to be fair, this is not just making it difficult for the sake of it. This was recognizing the fact that many startups will have to invest, will be loss making. Yes, you get the uplift, but a carry forward of losses isn't a great deal of use to you. This was giving the opportunity to get a cash refund up front. And I should be careful, it's not a refund in the sense that this is not tax you've paid. This is a grant or whatever word you may choose to use from HMRC. So if you're loss making, so you've done your tax computation, you've claimed your R&D uplift and you are loss making, you can surrender your gross R&D tax losses. And the credit used to be roughly exactly a third of your R&D expenditure. How do we get to a third? Well, you uplifted by 130% up to 1 April 2023, and then the credit was 14.5% of that. So if you take 130 of 14.5%, you get, sorry, it's 230, I should say, after you've uplifted your expenditure by 130, then you get approximately a third of your money back. So if you have £100,000 of qualifying R&D spend, you are prima facie entitled to £33,000 back in round sum, subject to the cap we'll come on to in a second. From 1 April of this year, the benefit of the R&D tax credit reduced to 18% because you get 186% of your R&D spend at just a 10% tax credit. So quite or a very significant drop there in the benefits of the tax credit under the small company regime. Now, you don't have to claim the credit. As we've said, startups inevitably take the cash. It's a bit like bullseye from my youth. You know, do you want to take the money or do you want to come back next week? Most people take the money and you can't blame them. But bearing in mind, you're getting 14.5% or now 10% benefit of your uplifted losses. You could carry that forward and that will save you corporation tax at 25% going forward. So, as I say, most people will take the cash, but it's not automatic and it is entirely your choice. Now, the rules are getting more and more complicated. It was recognised that this reduction was quite swinging and did punish companies. So for R&D intensive SMEs, they're still entitled to the 14.5% credit. What do we mean by R&D intensive? Broadly, where the company's relevant R&D expenditure is at least 40% of the company's total expenditure. So if you're in there, yeah, you still get your 14.5%. So it's still uplifted by 86%. So you take your 186%, take 14.5% of that. That works out about 27% of your net R&D spend. But I did mention this cap, and I think the revenues point here that hadn't been anticipated when the regime was first introduced, because as we'll see under the small company regime, you can claim R&D on work you subcontract out. And you could have subcontracted that work out anywhere. So HMRC's view was, well, why are we subsidising or giving credits to company when all they are doing is paying overseas entities to do the work? That's not what we want. So now there is a cap. There was originally a cap. It went and it's come back. The cap is 3 times the company's total PAYE costs for the year plus £20,000. That came in for accounting periods beginning after 1 April 2021. So where you had structures where companies in the UK were merely subcontracting all of their work overseas, that will significantly reduce their ability to get R&D tax credits. The cap, though, doesn't apply if the company is creating IP wholly or mainly by employees and less than 15% of its R&D is subcontracted to connected parties. But again, it's just, yes, I suppose we should be grateful. We've got an additional relief in the regime, or a bit more flexibility, but it is adding more and more complications. So you might want to think about if the cap is relevant. Let's say you are the director of the company. There's been a long-standing debate. Should you take salaries? Should you take dividends? It's something we have to revisit year on year as tax rates change. There's not, frankly, an awful lot in it these days. But if you as the director are doing R&D, then that may perhaps persuade you strongly to take your remuneration as salary. One, the salary will benefit from the uplift in the R&D tax credit. And secondly, you'll be paying PAYE, which will increase your cap. So something, just an extra little something to throw into the pot there. If you as a director, a shareholder director, I should say, are involved in the R&D process. Now, what happens though if your expenditure is subsidised? Oh, sorry. Let me try and avoid jumping through the slides. So, subsidised expenditure. There we go. Must have the shakes today. You can only claim relief under the SME regime if your expenditure is not subsidised. To the extent your expenditure is subsidised, you are thrown into the large company regime. So we'll talk more about the large company regime in a little bit. Where you need to be careful, though, is if you receive what is known as a notified state aid, and these are broadly EU-backed grants, and the most common example we see are SMART awards, then the entire project is thrown out of the SME regime, meaning you can only claim under the large company regime. Even if you only receive £1 of SMART award, that entire project, not just for this year, but for all years, is thrown into the large company regime. And that, as we'll see when we do the numbers, certainly made a huge difference, albeit the gap has narrowed. Even if you choose to repay your £1 of SMART award, sorry, that still will not help you. Where I have had conversations with HMRC, well, what if you've been doing a project that's been going on for a number of years, and in year 4, you claim a SMART award? Does that mean you have to then hand back your R&D tax credits under the small company regime for the previous years? And it's not something that's really addressed in the legislation. The oral answer I got was no. If you didn't know in those earlier years that you were going to get a SMART award, or you haven't applied, then you still should be okay. But it's certainly something to be careful of. Think very carefully. Yes, of course, clients want whatever sources of income they can have, but a very small grant could in fact leave them worse off if they are claiming under the SME regime. There's also been a bit of difficulty here about what we mean by subsidised expenditure. There was a recent case, the Revenue Lost Quinn. I mean, ultimately, the reason companies do R&D is to generate income from that. You're doing a development to develop a product that hopefully you will sell to your clients. So you're ultimately are going to get some payback for your R&D. Does that make it subsidised? I think most of us would say that's a pretty broad reading of the word subsidised, but this is the world we live in. In Quinn, the Revenue Lost, as I say, the tribunal ruled that there had to be a direct linkage between your expenditure and the income you're getting by way of grant. So if your third party says, we will pay you pound for pound for all the R&D you do, that's probably not R&D. If you have a contract with a customer and off your own back, you go and do some R&D to try and deliver as best you can to that client, and it's at your risk, client, quite frankly, may not even be aware that you're doing R&D in the background, then that, I think we could safely say, is still your R&D. But it can be very difficult to distinguish between subsidised work, Is it subcontracted R&D, etc., etc.? We have clients who have, say, again, developed a piece of software, or they have used a piece of software in their business that they have merely asked a software house to develop for them. Now, that software house may well have done some R&D off its own back. I would say it's probably the software house's R&D. If, however, the company has directed the software house to investigate the following areas, is paying specifically for that investigation, owns the IP from that R&D project, it's probably that company's R&D. But again, there's a whole area of greyness in between, but it's very important that these issues are clarified up front. Suffice to say, HMRC would not take too kindly to both the company and the subcontractor claiming R&D on the basis they both argue they're the ones who are doing the work. So contractual evidence is important, and it's important that these issues are addressed up front. So let's see if we can move the slides forward very carefully. What other qualifying conditions are there? Okay. But before that, I've gone too far again. There we go. Right, try not to breathe. So the company must be a trading company. If you want your R&D, you must be a trading company, although there is a relief for companies in pre-trading position. So it might be you're developing a product. It may take years to get to market. Arguably, you are in a pre-trading position. You can elect Section 1045A, I think it is, to treat that pre-trading expenditure as eligible for these R&D reliefs, notwithstanding, as I say, you haven't yet started your trade. Strictly, you must, though, make the election. Don't forget that. The one I always struggle with is this one. The expenditure must be revenue in nature. Well, yep, I get that. I get that. However, there is a particular relief that says if you capitalise your R&D expenditure as an intangible asset, you can still have full R&D relief in the year the expenditure is incurred, rather than when it hits your P&L, i.e. as it's amortised over time. Now, I've always struggled to square this. On the one hand, we've got a particular relief that says, notwithstanding your expenditure is capital, you can still have full R&D relief. But if it's capital, doesn't that imply it's not revenue in nature? And I've never quite managed to square this in my own mind. I mean, certainly we've seen the revenue take the point. If, for example, you build a software platform for in-house use, be it, accounts management, whatever it may be, financial management, billing, whatever. HMRC do take the point, and there's plenty of stuff in the manuals about this, that if your employees in-house write a piece of platform, that notwithstanding that salaries, we still have to treat it as capital for tax purposes and claim capital allowances on it. And we've certainly dealt with inquiries there before. So I'm struggling to see the difference here, and I've yet to see the HMRC challenge on this point. But on the one hand, capitalising it and getting full R&D gets you the best of both worlds. You're strengthening your balance sheet, but you're getting full upfront tax relief. We'll see if HMRC ever take the point here. Where you do need to be careful, though, we've seen examples where people have capitalised software costs as a tangible asset. Then you do have problems. Then you're not going to get the benefit of this treatment. Then you'll only get relief as the expenditure is amortised, provided, as I say, HMRC don't say, well, you've treated it as capital, matey, be it on your own mistakes. So there is instead, though, 100% capital allowances available for capital expenditure, but that's designed to cover, I bought a laptop for R&D purposes. Not really a great deal of use these days, given we've got the AIA and full expensing, etc., etc. So we just mentioned this in passing. But then, as I say, expenditure must be revenue, and if you're doing R&D, most times, I would argue it probably should go to the P&L, because by dint, it must be something that's speculative, new, cutting edge, etc., etc. I can't see there's any guarantee of returns on it. I'd have thought probably, although I was only the 5th greatest accountant in Manchester, according to some people, you're probably not satisfying the test for capitalising it under accounting standards. Probably better to write it off. Look, your choice, you do have the choice there. Just bear in mind, if you do capitalise it, though, you do need to add back the amortization in previous years. You can't double dip. You've had your relief up front on the expenditure, you've had your uplift, the amortization should be added back. One of the conditions that was introduced a number of years ago now, the company must be a going concern. HMRC were getting claims from companies in administration, etc., etc. This is designed to support companies that are ongoing and to grow. And if you're already in administration, that's not the sort of targeted relief HMRC are looking to provide. So I guess fair enough. There were a few little subtleties in there. If, for example, you transferred a trade from one company to another in a group, is that company still a going concern? I think technically it did previously preclude relief, albeit the legislation I think has been tweaked to amend that. There was also a cap. You could only have up to £7.5 million, €7.5 million. Again, we can see the EU influence here per project. In reality, not a condition we ever saw causing undue difficulty. And it's not that you've had £7.5 million of R&D tax credit, it's the extra credit compared to the large company regime that you would have had. So again, the maths is a little more complicated there than you might think, but just bear in mind there is that cap. So those are the main conditions that we need to be careful of. Oh, there we go. Maybe I'll use the buttons from now on. What is qualifying expenditure for these purposes? So we've talked about a project, we've talked about the rate of uplift on your qualifying expenditure. Let's define what we get the R&D tax relief on. The main driver here are your staff costs. Look, ultimately, this is about HMRC encouraging employment in the UK, encouraging investment in the UK. So we look at each member of staff and we prorate their time. How much of their time did they devote to this R&D project? And we look at gross salary costs. So that's salary, employers' NIC, employers' pension costs. Add all that up and then say how much of Bob's time does he devote to R&D? It may be 100% for some people. That's all they do is R&D. HMRC didn't used to like that. They said, look, he's got to have a comfort break. He makes himself a cup of tea. He has appraisals, etc., etc. No one can devote 100% of their time to R&D. I think they've rode back from that strict interpretation. If all of their productive time is R&D, then it should be 100%. Again, it's subjective though, isn't it? You know, I always say to my clients, look, we need a number that you are comfortable, you can look HMRC in the eye and justify. But if you do timesheets, keep the timesheets. We've certainly been asked for those, etc., etc. And just sniff it. Does it make sense? You can certainly claim for management time to the extent they're overseeing the R&D, but if you've got somebody in accounts down at 95%, clearly that just doesn't look right. And if you give HMRC a reason to ask one question, they will ask 100. One thing that is clear though these days, we can no longer claim for benefits in kind. There is a little subtlety. I'll just briefly mention expenses. If an employee lays out for expenses and claims those back, then technically that is part of his salary, albeit we can claim a corresponding deduction. So it all comes out in the wash. But for expenses that the employee lays out on his own, out of his own pocket, then strictly you can claim for those as part of his overall remuneration. If he's paying on a company credit card, no, excluded. Well, it's only nibbling at the edges, but there you go. It might be something to think about. Subcontracted costs. This is the bit that HMRC have historically objected to, where work is subcontracted overseas. But yes, we can claim under the SME regime. Broadly get 65% of what you pay your subcontractors for their R&D. So it's a fixed percentage. It's designed, I think, broadly to look at sort of their profit margin. All a little arbitrary, but what did you pay them for R&D? Exclude what you paid them for other services, 65% of that. There are special rules though if you are subcontracted, if you are connected with your subcontractor, there broadly you look through to their underlying qualifying costs, their salary costs, and you can claim for the lower of that and what you've paid them for the R&D. There's also this slightly confusing title of externally provided workers. What's all that about? Well, these are individuals who walk and talk like employees, but are provided by a third party. So it was originally aimed at sort of agency staff, but it can be people working through their own personal service companies, etc., etc. If they work under your direct supervision and management, you can claim, as with subcontractors, for 65%, again, special rules for connected parties. So sometimes it's not always easy to distinguish between the two, but a worthwhile category, and I think, to be fair to HMRC, reflecting the way that certain businesses, particularly software businesses, work. You know, they do use external staff, they are under their control, then you may be able to claim. There's also so-called consumable items, materials and utilities such as power used up in the R&D process, and there's software on top of that. So these are your test tubes you're blowing up in the laboratory, prototypes where you are physically changing or using up the parts. What HMRC used to object to was, well, we built 1 million prototypes, Mr. Inspector, just to check. So we'll claim for all of those costs, they're consumable parts, and then you end up selling those, lo and behold, fully working products. Broadly, if those prototypes end up in the hands of your customers, they don't fall within consumable items anymore. But software, as I say, you can certainly claim. Power, yes, the revenue do say any reasonable apportionment, but we're kind of tinkering at the edges, yes. And hurrah, from the 1st of April 2023, cloud computing and data costs are now specifically included. I think there was always some debate whether they were included. I suspect the answer was probably not, albeit I've seen people claim them, but from April 23 you can. And the way the legislation works, let's be clear, is there are these specific qualifying heads of qualifying expenditure. People often say, well, look, you know, I've hired a laboratory purely for the purposes of undertaking R&D. That must be qualifying expenditure. Look, I'm not, you know, no one's disputing that you needed to incur that expenditure, that it's trade related, but unless it is in any one of these heads, it will not qualify for these purposes. So sadly, I hear you, but if it ain't in that list, you ain't coming through the door. So there we go. Right. I'm going to press a button this time and see if that works. No, it doesn't. Does this button work? No, it doesn't. I'm going to roll my mouse very gently then. Right, that was the one I wanted. Consultancy costs. Well, we just talked about our qualifying heads. We had employees, we had subcontractors, we had externally provided workers. What was conspicuous by its absence is consultancy costs, and these costs do not strictly qualify. They are not within any of those qualifying heads. What is the difference between a consultant and a subcontractor? Well, in the real world, probably not a lot. A consultant in the revenues view is someone who just mucks in and helps generally with the project. A subcontractor is someone you go, there you go, you take away that bit of the project, come back when you've finished. Look, it can be difficult. It may be possible to argue your relationship is one of contractor and subcontractor. There is specific guidance in the revenues manuals on this point, but again, my advice to you is there's no point trying to deal with this a year down the line when the project has finished. As you are starting the project, as you engage third parties, make sure the contracts are clear enough that there should be no debate as to whether they're a subcontractor or a consultant, as I'm afraid HMRC can and will reject a claim for a consultant. So get the language clear, get your accounts clear, get your contracts clear, and that hopefully will save you a bit of headaches down the line. So that's all I'm going to say on the small company regime. Of course, devil's always in the detail, but you know, if you're a standalone small company with just a few costs, in theory, it should be relatively straightforward, albeit the main difficulty these days is getting over that first hurdle. Is what we are doing truly R&D for these purposes? Let's just talk about the large company regime. Hooray! Rules are similar, I've put there, and I probably need to be careful. What I'm talking about there is, well, in particular, what is the definition of R&D? That is the same between the two regimes. There are some important differences in what you can claim for. In particular, under the large company regime, you cannot claim for subcontracted R&D. generally speaking. Certainly not where it's subcontracted to another company. If it's subcontracted to an individual or a partnership of individuals, for example, you may be able to claim. The relief is less generous, though. It's now, gap's narrowing, it's now a 20% tax credit in respect of your qualifying costs, whether you're profitable or not, albeit, as I put at the bottom there, if you are loss-making, part of that credit is withheld for offset against future corporation tax liabilities. Quite an increase here, though. It was previously 13% up to 1 April. Started, I think, at 11, it's crept up to 12 to 13, and now 20. But the way you account for this is very different. R&D tax credits under the SME regime go in your tax charge line, below the line. This credit goes in, it's an above the line credit, goes in other income in your P&L and is itself taxable. And again, we can debate whys and the wherefores. I think it was felt this would economically give companies a better way of measuring the return on their R&D expenditure. But look, it is what it is. So that's really all I'm going to say on the large company regime, to be honest. I just want to compare the benefits here. So if you're a loss-making SME, in all these examples, you've incurred a whopping £100 of expenditure. There used to be a minimum of R&D costs. I can't remember what it was. It was a pretty trivial amount. That did go. But you can, in theory, claim for £100. I'm not sure I'd bother. But all right, £100 of qualifying expenditure. You used to get 130% uplift, so you get a gross R&D cost of 230. Surrender that at 14.5% gives you 33.35. That's our 33% of our qualifying expenditure. Post 1 April, as we've seen, 18% uplift, only a 10% credit unless you're an R&D intensive company. £18.60p you will get back, 18%. What if you're profitable? Well, you start with £100. You previously would have had £130 uplift. So you're getting the benefit of £130 at 25%. Sorry, at 19% it would have been. £24 benefit. Post April 23, only an 86% uplift, so an extra 86 quid, but that now saves you tax at 25%, so £21. So because of the two conflicting forces, yes, the rate of the uplift has gone down quite significantly, but it's saving you more tax because sadly corporation tax rates have gone up. Under the RDEC regime, £100 again in qualifying expenditure, your gross R&D expenditure credit was £13, but as we say, you pay corporation tax on that. That would have left you with £10.53 previously. Now, 20% uplift, 25% tax on that, you get 15 quid left. So post April 2023, as you can see, 15% benefit under the large company regime, 18 quid back just over if you're a loss-making company under the SME regime, and £21.50 if you're a profitable SME company. So the rates and the differences have narrowed, and we'll see where we go from April 24 shortly. In fact, we'll see it right now. So from 1 April 2024, a single merged regime. And it's a bit like when the Lib Debs and Tories went into government together. You know, we remember them saying what we've tried to do is take the best bits from both parties. Well, this is largely modelled on the large company regime. However, the good news is you will get the credit for subcontracted out R&D. So that's been nicked from the SME regime. And that was a major concern when these changes were first mooted. So that is a positive change. One other change was due to come in 1 April this year, but has been pushed back, was this point. We said, look, where R&D is being subcontracted overseas, this is not quite what we had in mind. We were somewhat bound whilst we were in the EU that we couldn't be seen to be discriminatory. But now it has been confirmed that from 1 April 24 onwards, subcontractors and externally provided workers must do their work in the UK. So we're being focused inwardly on work done in the UK. There are some very narrow exceptions where it is not physically possible to do the work here. You know, I can't see that's going to be very relevant to many of our clients, but if you are doing something that physically can only be done overseas, then potentially you might still be able to claim. Obviously, these rules are still subject to finalisation. There may be some tinkering, I do welcome the fact we'll have a single regime. It can be very difficult to ascertain whether you're an SME and to trace through shareholders where we've got complex group changes. It is what it is. So some good features from both regimes going forward, and we'll see how all of that pans out. But I think that's not really the major concern, quite frankly, at the moment. The major concern is what is the meaning of R&D and some fundamental changes to how we actually claim the relief. Now, when these reliefs were first introduced, you used to have 6 years to claim the R&D uplift and 2 years to claim the credit. So you could be going back a number of years. It was then aligned broadly 2 years to make the uplift or the credit claim. And that was it. HMRC did object to getting a load of claims right on the 2-year deadline. They thought such claims were primarily driven by some rather dubious R&D houses out there, and they were certainly flagged up for special attention, and they certainly are now. So now we have this notification. I struggle with this. Companies must notify HMRC within 6 months of the year end of their intention to claim if they're claiming for the first time, or if their last claim was submitted more than 3 years ago. So there's no panic here. Say its accounting periods beginning after 1 April 2023. I mean, where we may end up is just we'll make notifications for every single one of our clients, HMRC. There you go. There's the list. We've covered our backs this way. Because if you don't notify, then you can't claim. Quite what was so wrong with the 2-year deadline, I simply do not know. But be aware, as I say, it's not an immediate panic, as it were, but there will be people who miss that, and it will cost them. Now, it was always the case that our best practice was to include a full supporting narrative and a full breakdown of R&D costs. In theory, all you had to do, though, was put one number on your tax return. This is my R&D expenditure. That was a claim. If you made it within 2 years, all good. And of course, HMRC could challenge, but anecdotally, we know of lots of claims that have gone in without any supporting narrative, without any breakdown across. And as we saw before, it was just help yourself, not a query in sight. But from 8 August 2023, we now have this new digital online submission. It was meant to be 1 August. They pushed it back a bit because, surprise, surprise, HMRC's online systems were not working as they would so wish. What is this? Well, this is a list of predefined HMRC questions that they would like you to answer. And we'll look at exactly what those questions are in a second. You also have to provide them with additional information. It's a bit of a pain up the backside. It's an extra bit of compliance. HMRC published some statistics last week that said 50% of R&D claims submitted since 1 August were not made using the digital form. So you submit the digital form and then you submit the tax return. But people weren't submitting the digital form. They were just submitting a free-form narrative as they previously had. They are rejected out of sight. You simply do not pass go in such circumstances. So you must do the digital form. If you get it all right, they still say, yeah, we'll look at it, and within 40 days, you should have your cash back under the SME regime. And just, we'll talk about more about inquiries in a second, but I would simply just check the progress online. You should be able to see the return logged. Then it will show the R&D tax credit repayable, and then it will show it being repaid. So do bear in mind there is this, frankly, rather annoying online digital form you have to do. And it's not just answering specific questions. There's a bit of general background, UTR, VAT number. They want an internal R&D contact. We hear lots of horror stories of people who are approached by some less than reputable R&D houses. They just submit everything. Company wouldn't have a clue what had gone in. They got the cash back. They didn't care. But they want somebody to sign in blood from the company. And then we have to answer these specific questions. What's the main field of science and technology? What was the baseline level of science and technology the company planned to advance? What advance in science and technology knowledge did the company aim to achieve? What were the scientific or technological uncertainties that the company faced? And how did your project seek to overcome those uncertainties? Now, there's nothing really new in that. These are all the sort of questions we would seek to put in the narrative, albeit our practice was never to have a predefined version or skeleton for a client to complete, and we'd let clients freeform the narrative, provided they did address those questions. But you can see the focus is very much on the technology that underpinned it. Pages of company background, etc., etc. Yeah, it doesn't really sway the case one way or the other. We said it's about looking under the bonnet. If you're doing 1 to 3 projects, you have to do that for each and all of them. Otherwise, describe those projects that broadly account for at least 50% of the qualifying expenditure. That's what the revenues say. Now, the difficulty I have with this is, well, I do, of course, still want to give you a bit of company background. I do, of course, want to tell you about who the key players were in the team to give you comfort, Mr. HMRC, that we had competent professionals and we weren't just keeping up with industry expertise. Now, we can still attach stuff to the tax return, but do I duplicate everything I've put in the digital return? It's just not quite clear to me, and it's not particularly helpful. There isn't sort of the space. I mean, you could put additional information in one of the answers to those boxes, but it would be helpful if you could add additional information. Rather than now, I think we're going to have to duplicate a lot of the information. So we'll see how that evolves, but that's where we are. But yeah, as I say, make sure you do your digital submission before you submit the tax return. Otherwise, it will just be rejected out of hand. There's no softly approach here by HMRC. That is the way we are going. Now, HMRC inquiries. I've been doing R&D claims for pretty much 20 years now. How many inquiries have I had in that time? Maybe 10. How many rejections have I had in that time? Maybe 2 I can think of. And the truth of the matter is, HMRC was simply not policing this. That has very much changed, and it's changed for the worse. The statistics are now, I think we've got these 300 extra inspectors, about 1 in 35 R&D claims are being inquired into. Now, that might say the odds are still in your favour. Bear in mind they are focusing on the software space. Bear in mind they are focusing on claims that are submitted close to the R&D deadline. But I have to say, you know, we are happy to engage in a constructive conversation with HMRC about R&D claims. We know it's subjective. We expect to get a fair hearing and for HMRC to place some reliance on the company's experts. What we're seeing instead is a rather chaotic, aggressive approach from HMRC with a complete lack of engagement by HMRC. There's no name on the bottom of these letters. It's just an R&D caseworker. We've had one horrible case where we had an inquiry. HMRC said we're not satisfied. 3 times we wrote back to them saying, look, you've asked for more information. You're talking about the software platform. This company does air conditioning. Help us out here. What is it you need? Please don't send us just a pre-formatted letter. 3 times that was ignored. We then got a closure notice and a demand for penalties. It's quite outrageous. And if you have a look at the revenues questions on carelessness, they are saying, one of their questions, the one that got me was this one: has the company ever sought advice from HMRC on its R&D claim? Well, we'd love to try and find someone to speak to, but given you've ignored 3 rounds of letters from us asking you to clarify what you want, if there is a helpline out there for R&D, I'd love to know where it is. It's frankly ridiculous. Has the client reviewed our internal instructions at CIRD 8000 onwards? No, of course they haven't. They've sought professional advice from a professional firm of advisors, and there's nowhere in the revenues manuals when you talk about penalties that says they have to do that. If you've relied on professional advice, then that should be good enough. HMRC claiming to be experts in air conditioning. Well, no, you're not, Mr. Inspector, and it's very, very difficult. Another case, inquiry, the cash had been repaid 6 months previously. Yes, HMRC have the normal inquiry window. They're within their rights to open inquiry, but come on, you know the company spent the money. It's a bit cheeky of you now to be asking questions. Yes, I know you strictly can, but that was never the understanding. The claims it was always on the basis we would review and then repay. Clients spent the money, revenue's now asking for £130,000 back. please let us have details of the projects. All right, we'll accept project 1 and project 3, but not project 2. We write back on project 2, 3 months, again, no response from HMRC, notwithstanding, if you don't respond within a month, you get a naughty letter from them. We then get a new inspector who says, actually, I'm not happy about the other 2 projects, so I'd like to ask further questions on that. Outrageous. We'd sent them everything we had. The inspector then phoned my client without our permission, without request. I was appalled, and then remarkably closed the inquiry without any adjustment. So it's very difficult to know how to deal with these, but look, give as good as you get, and push back and seek help where necessary would be my advice. There are specialist R&D houses out there, some, as we say, less reputable than others. They're all driving far nicer cars than I am, but we've always taken the view we will submit R&D claims where we feel there is good basis. We have never just put in spurious claims, and I'm sure most of you haven't, in the hope HMRC wouldn't inquire. Those sort of R&D houses deserve to go, but this is very much HMRC targeting and threatening everyone, notwithstanding it's only a small sector of the industry that I think have caused many of these problems. So if you need industry expertise, then you may wish to consider engaging with an R&D house that has industry experts. Of course, we at BKL will be delighted to help you on any of the more technical matters. How can you maximise the claim? Well, ensure the accounts are consistent and helpful. If you're doing R&D, it should say so in the accounts. Make sure when you submit the claim, you fully reconciled your qualifying costs, the costs in the P&L. Avoid unnecessary questions. Identify when your project starts and ends. We'll come back to that in a second. Get your costs in the right company. Have a file. If there is an inquiry, then make sure you've got your timesheets, any patent agreements, any subcontractor agreements. Have everything ready at hand, because bear in mind, HMRC have a year from submission of the R&D claim. In most cases, depends on the size of the business, might be 2 years from the end of the accounting period to open inquiries. You might be trying to go back historically a long time when the people who did the work have long since gone. Don't forget about the notification and digital submission. And as we said, if you need industry expertise to benchmark the claim, then that is something these days you may wish to consider. Get everything up to date and get the claim in good time. Just going back to that point about when the project starts and ends, a project starts when the work to resolve the scientific or technological uncertainty starts. That does include the planning stage, and if you have a look at those DTI or the new guidance, as I say, slightly rewritten these days, I think it's paras 33 onwards talk about this. So the project ends when those uncertainties have been resolved, but merely bug fixing, cosmetic effects, production activities, that is not R&D. But nothing stands still for long these days. There may be a second phase as you completely redevelop this project, completely rewrite the software, etc. But we've even seen HMRC argue that unless there's a defined end to the project, it can't be a project, and therefore it can't be R&D. And this is, as I say, they've gone from, trying to help businesses develop in the UK to just looking for reasons to say no. That's when a project starts and ends. One question we often get asked, we'll just cover quickly: can I claim for abortive projects? Well, yes, you can. And it kind of proves the point, because the whole point of R&D, it should be speculative. We should be pushing boundaries. There should be no known way of doing things. And if it fails, notwithstanding your best efforts, then absolutely that can still be R&D. But it must be a project. Just sort of randomly trying things, HMRC are unlikely to accept. So a difficult game, R&D. It'll be interesting to see how things settle down over the next months and years. Often we see HMRC, the pendulum swings all the way as they start trying to say no to everything. And then hopefully they ease back. How can you get help? Well, the revenues manuals, always a good source. CIRD 80000, and of course you're going to make sure your client reads every word of those to avoid penalties. Seek external expert help as necessary, whether that's tax help or whether that's industry expertise. We of course are happy to help, and one of the things I would say in the current climate is do check your tax investigation insurance. It may well provide coverage for inquiries into your R&D. But bless them, insurers may look quite closely at that. So make sure you don't do anything to prejudice the possible availability of help from your tax investigation insurer. But do remember to add back those premiums because they're not strictly disallowable. We saw that question come up recently. So that's R&D tax credits. You've all been very shy today with your questions. If you've had any further thoughts or any war stories you'd like to share, do feel free to drop me and David a line. Otherwise, as I say, we will circulate the slides and a copy of this presentation, and I think it's loaded up on our website for future reference. So if you need to have a look or you just want to hear it again, it was so good, then so be it. Otherwise, thank you for your time. Thank you for listening. I hope that's been helpful, and no doubt we will be back soon. So nights are drawing in. Enjoy those personal tax returns, but thank you for listening. Take care now. Bye.